Okay. Now, today, we just want to do the other brief and easy calculations that happen in the rest of the learning unit. Okay. So let's get into it. Okay. Now, some of the stuff is really easy because you guys have had accounting, you've had exposure to these statements before. So I want to just kind of run through these exercises, okay? So that we can actually do the slides to learning unit 3 in the second session. Where's my textbook? Okay. So let's start off with activity 2.1. Activity 2.1. And there under the required, it says, which one of the three businesses has the highest net profit in Rand value during a normal sales week? Okay. Then part B, it says, which one of the three businesses has the highest gross profit as a percentage during a normal sales week? Okay, so the next one they want us to do net profit. First part, they want us to do gross profit. Then the third part, they say which one of the three businesses has the highest net profit as a percentage of sales during a normal sales week. Normal sales week. Highest net profit. Percentage. Highest net profit in Rand value. Okay, now that makes sense. All right, and then part 4, they're saying, suppose each of the three businesses decided to engage in a clearance sale, a clearance sales week, whereby they all marked down their products by 25%. Assume further that the following number of units was sold by each of the parties during this particular week as a result of the sale. Okay, so business A sold 210 units. Yes?
What about weekly overhead expenses? Is it like fixed? Is it a fixed amount?
Yes, it's I'd say they're just giving us, yes, it's fixed. It's fixed. And we're only looking at the week. Does it make sense? We're not looking at a whole month. Because then we have to times 4, basically. Okay. So there, I'm sure when we look at that overhead, it's probably variable costs and fixed costs in there. So that's why I was kind of hesitant to answer. It's not locked. Okay. Business B. How's it coming? Business B sold 130 units, and then business C sold 23 units. Okay, this is during the clearance sale week. Okay, then for each of the three businesses, clearly indicate whether or not the clearance sale was a profitable move. Motivate your answer. Okay, all right, cool. All right, so the calculation here is fairly simple. What we obviously need to do is we need to calculate the revenue for each of these businesses. All right, in each of these sections, we need to calculate the revenue. Then we need to minus the cost of sales. How do we get the cost of sales? Can you see there in the table? We have cost price per unit. So what we then do is we say the cost price per unit times the number of units. Then we get our cost of sales. Then obviously we'll have our gross profit after we deduct it from the total revenue. And then from that point, we then need to subtract the weekly overhead expenses, all right? And then we'll have our net profit for each respective business, okay? And then from there, we can obviously do our ratios, at least for the normal week. We do the exact same thing for the, what do you call it, the clearance sales, weeks, and then we will then also be able to calculate whether it was a good idea or not. Okay, so what I've done here is, this is question 2.1. I think let me zoom in. All right, the following analysis can help us determine which business makes the highest net profit in rands or in rand value. Okay, so somebody calculate for me 142 units. Okay, I'm getting that 142 from your textbook. We're looking at business A, right? If you look in the table there. So 142 units times 200 rand. What do we get? 20,400. 28. Thank you very much. 400. Okay. Which then gives us a gross profit of 28,400. Okay. And then we have the weekly overhead expenses. In other words, expenses for the week. All right, which is 18,500. Which gives us what? What's our profit then for business A? 9,900. Okay, awesome stuff. Yo, is this door? You're not the only one. All right. Then, so we've calculated the rand net profit for business A. We can now go to business B and do the exact same thing. What is the revenue? We had 75 units. We're doing question 2.1. We're doing 75 units times the revenue of 1,500 per unit. That should give us what? 100 and 500. Okay. Is anybody else feeling hot?
I'm done. Hello?
Is anybody else feeling hot? That's it.
Why that shit in this place?
I really think it's just hair. Okay, anyway, let's continue. All right, thank you for that, sir. So then what is the, okay, 1,000 times 75, that should give us 75,000. Okay, right. Then what our gross profit? 37,500. Is that correct? Okay, cool. So what is then our profit? 16,500. Okay, so it seems like business B has more profit than business A, huh? Okay, let's go to business C. Business C, 15 times 8,000, what do we get? 120,000. Okay, then what is the cost of sales? 67,000. Okay, 500. Okay, then what is the net or gross profit? It's right there. And we have our net profit. Business B has got the highest net profit, rand value. Okay, then we can obviously then go on to calculate the gross profit for each of the business. What's the formula for gross profit? Somebody tell me. Gross profit, yes. Formula for, no, for gross profit percentage, sorry. Gross profit divided by? Yes, gross profit divided by sales. Okay, so literally here we have included that there. Okay. This. Right, let's see if I remove these rands, if this thing will behave. Nope, it's not interested in my agenda. Oh, there's a space here. Maybe Maybe that's the issue. Ah, there we go. Oh, my bad. So for the first one, we have 50%. Are you guys getting the same amount? Let's see here. What do we have? Okay, there we have 33%. Oops, I think I subtracted the wrong thing there. So here, what do we have? We have, I'd say 10.4%, okay? All right. So there again, we can see business A seems to have the highest gross profit. Didn't make the highest net profit, but it seems to have the highest gross profit. So in other words, it's got the lowest what? Cost of sales in relation to revenue. Does that make sense? Because remember, in gross profit is your revenue minus your cost of sales. The C percentage is wrong.
We use net profit instead of gross profit.
I use net profit instead of gross profit. So what is our gross profit? 52,500. Okay. Let's see what's happening here. So what should we have? Oh, we have 43%. You could say 44%. Okay. Right. Okay, so anyway, business B is still the highest there in terms of gross profit. Okay. Then the next one, we're also calculating net profit percentage. And what's the formula for net profit percentage? Somebody tell me. Net profit divided by sales, 100%. Okay. So let's calculate what that should be. A. What I get. Okay, and that's what I get for business B. Hopefully this time we have the right percentage there for business C. But again, we have the highest net profit percentage being business A. Okay, so you can make a high net profit, okay, but it doesn't necessarily mean you are the most profitable. Does that make sense? So you might have higher expenses or a higher cost of sales. Okay. Right. Awesome stuff. So that was pretty straightforward. And then I think the last bit there, what did they want us to calculate? Now with the last bit, they want us to calculate, there's a clearance sale in each of the weeks, right? And then they want to calculate whether that was a good idea for the respective businesses. Okay, so all that I want us to do there is to quickly just calculate businesses A's revenue and cost of sales. Can you see it's literally the same thing? The only thing that has changed is the number of units that were sold. Okay? Is that correct? No. Yes, actually, the number of units that were sold. So I'll show you what's actually happening here. So 140 units times 400, what do we get? Somebody calculate for me. What do we get? 56,800. Okay, and then in terms of cost of sales, 200 times, so that would be half of that, so that should be 25,000, 3,200, yep, 28,400. Okay, almost there. Okay, all right, and there we have our net profit. Okay, so in this first half, I'm just going to highlight it quickly. That was our normal week of sales, okay? In this second half, now we're looking at the clearance sale, okay? So since we obviously dropped prices, okay? Since we obviously dropped prices, let's read, let me just make sure. Yes. Oh, yeah, we dropped our selling price, we marked it down. Okay, you can see there from 400 to 300, okay? So since the price is less, you know what happens? Consumers begin to buy more products. So there we have 210 units that moved, okay? And then we have our revenue, okay? But can you see something interesting? Since we moved more units, our cost of sales still remained the same. So obviously we made less of a gross profit and our expenses were still the same, okay? So our net profit was actually less. Here we made 2.5. The other week we had 9.9, okay? Right, let's check out the other businesses. Okay, so for business A, didn't really make good financial sense. For business B, it looks like it was even worse, okay? Yes, once again, we sold more units, okay? But at the end of the day, our net profit was actually, in fact, we made a net loss. We actually made a net loss, okay? All right. So once again, not the brightest of ideas. Okay. Then for business C, what do we see? Similar trend, the profit was less. Okay. Profit was less. Right. So what's the conclusion there? The clearance sale was not profitable for any of the businesses. Both business C and business B and business C made a loss during the clearance sale week, while business A made a lower than usual net profit. Okay, wait, for some reason I saw there was a profit, my bad. Okay, right. So one thing I just want to throw out at you guys, yes, business A made less of a profit. Did they say business? Yes, business B and C are the ones that made a loss. Business B and C were the ones that made a loss. Yes, business A made less of a profit, but one of the reasons that could still justify you actually doing this anyway is the fact that the stock that you're actually selling might go off soon. So it's better to make less of a margin than to not move it at all, because then you're just going to make a complete loss on those products. All right. So there could be logic behind still selling at a smaller margin. Okay. These guys should probably, if they still want to give a special or a markdown, they should probably go for 10% or something less than what they actually put forward. Okay. So that was question 2.1. Next question that I wanted us to look at is question 2.2. Okay, so here I think actually let's just look at the answers as opposed to actually going through it. Okay, so here we're doing pretty much the exact same thing. The only difference is now we're looking at it from the perspective of buying in bulk. So in buying in bulk, we are reducing our cost of sales, right? And then seeing how that is then obviously going to impact our profitability, okay? So if I just look at this one business, just business A, over here you can see a normal week, okay? Right? We made 9,652, okay? Our gross profit was 28,000. Okay, if you scroll down, you can see taking into account the 5% discount, okay, because we bought in bulk, you can see that our net profit was 11,000, and then obviously our gross profit was 29,000, okay? So the net profit before interest and tax increased to 1,407. So can you see, as a financial manager, when you look at these numbers, you would then obviously say, moving forward, we should buy in bulk, okay? Because obviously we're yielding a higher profit. Remember, our job as a financial manager is to maximize profits and increase shareholder wealth, okay? So that, in a nutshell, was your 2.2. 2.3 we did together. 2.4, I think we actually did that together as well. Yeah, 2.4 we actually did together. That was where we were adjusting. And then 2.5 we did together. That was when we did tax together. Okay. 2.6 is a good exercise to do. Okay. But literally, again, you're just adjusting amounts based on the information given to you. Okay. And then 2.7 is much like 2.9, which we did together. So again, guys, do as many of these exercises as possible. All right. So you want to go through that. It's got a great balance. It's looking into not only ratios, but also looking into some great theory there. So if you look at part B on 2.9, they say list 2 examples of shrinkage. Okay, I think we can just run through it quickly before we move on into unit 3. Okay, so 2.7, there part B, it says list 2 examples of shrinkage that will have an effect on the on the profit of a business. On the profit of the business. Examples of shrinkage. 2 examples of shrinkage. I think our textbooks are obviously different, but question 2.7. Do you have a question 2.7? So, yes, that's the one. So, somebody tell me 2 examples of shrinkage. Death? Theft, yes, 100%. Theft, damaged stock, a natural disaster, obsolete stock. Okay. Yeah, there's literally, you could go on and on and on. Yeah. Okay. Go back to the slides, you'll find answers to that, even more answers to that. And then part 3 says use the information below to answer the questions that follow. Show all your calculations. Extract from the statement of comprehensive income, all right, for the year 30 June 2009. Okay, so what do they want us to calculate? Cost of sales for the year. There they've given you gross profit for the year, and they've given you your turnover. In other words, your total revenue. Okay, so obviously the difference between your total revenue and your gross profit is going to give you your cost of sales. Okay, so there's nothing too hectic there. Total income for the year. There you're literally adding your gross profit plus your other income, right? And then finally calculate the net profit for the year, okay? All right, I'm sure we now know how to do that at this point. And then there it says name 4 measures that can be used to put in place to help prevent stock losses, okay? Again, the answers there on the slide. You can put CCTV, in-store presence, the security guard, all right, account for records of inventory. In other words, monitor your inventory, okay? Adequate and secure storage, all right? All right. So there you go. There you go. That, in a nutshell, ladies and gentlemen, is your unit 2. Is everybody happy? Any questions or thoughts on unit 2? Okay. So there, honestly speaking, it's really just the ratios that you need to get a hold on. Okay, but it's not hard once you've written down the formulas, you've written down a little bit of a brief definition or summary in relation to that. So guys, I can quickly give you a break, and then we can then go through unit 3 slides. Then the next time I see you, it will be getting into some number crunching for unit 3. Is that fine? So let's call it for now. Let's get back together at 4, and then I'll just go through the slides. It's just about 21 slides. Won't take us long, and then we can call it a day. Okay. Register circulating, right? Yes.